here we go. Euro to US dollar. As of right now, guys, we are seeing structure to start creating some type of base here in which we can see some support being found on the 118 handle. And with that, guys, if structure does start to consolidate, right, we could expect some type of pullback or relief, at least from this initial impulse to the downside. Taking it to the 4-hour time frame, guys, as of right now. Oops, that is the 4-hour time frame. Taking it to the 4-hour time frame right now, guys, we can see that Euro US dollar did break out of this continuation pattern after this initial impulse was made, but is failing to break this 118.22 handle. And so with that being said, guys, we're going to be sitting in a range bound as of right now. And so if structure does create lower lows, that is a potential sell opportunity, but just know that that is going to be warranted as higher risk, right? Or and just more of an aggressive approach simply because of the entire nature of the structure and where we are, as it is quite of an extended play, right? But guys, if structure does in fact start to break out and start creating short-term higher highs, you can potentially take one short-term buy to the upside. Just remember that you are range bound, so any of these trades are going to be short-term until you see a clear impulse above and definitely creating higher highs, followed by a continuation pattern to rally it back up. Or guys, you definitely see another impulse to the downside, followed by continuation pattern, and then from there you could sell that back down. Failure to do so, guys, we will just sit in a range for now until a catalyst is given. And so with that, you want to be quite careful in scenarios like this. USD CAD, looking at it from the daily time frame, still expecting continuation to the downside as long as we're holding that 129 to 129.50 handle. And as of right now, guys, we can see that structure did make an impulse, falsely breaking that 129 handle. And then from there, we are in a short-term relief due to liquidation and profit taking. Taking a look, guys, at the 4-hour time frame right now, we can see here that structure is creating a nice flag for us. But one thing to take into consideration is that there is an impulse beside an impulse, right? We can see that we have this initial impulse that warranted the false breaks above, right? Followed by we did get some type of relief or profit taking, as we like to call it. But at the same time, there is this short-term bullish momentum followed by this short-term relief. And so it's going to be interesting on which way this ends up playing out. If structure does start to continue to the upside, start creating higher highs and forming continuation patterns, we could expect structure to start testing the 129.16 handle. Just remember that this will be warranted as short-term and higher risk simply for the fact that you can see that structure has had difficulty breaking above that area, as well as the entirety of the structure is still set for continuation to the downside. Now, guys, if that bullish momentum doesn't happen, and let's say structure fails to create higher highs and starts being capped near here, you want to see a strong enough impulse to the downside followed by some type of pullback, and that is your trade to the downside. Once you get to the low, stops or break even, and your goal is to run that all the way back down to the 126.15 handle. Failure to do so, guys, may just warrant a consolidation within this area, and you really don't want to be sitting within there, right? You want to see clear breaks below or above. Pulling it right now, guys, into USD JPY. If we take a look, like we said before, we are treating this entire bullish momentum as short-term and as a corrective structure, simply for the fact that this was the impulse to the downside, and we are treating this as relief or liquidation, and we can see the entirety of the momentum is still set to continue down. With that being said, we were stating that the momentum to the upside should be more is short term, and so any bullish plays will be looked at from a shorter term perspective. Looking at it as of right now, we can see that US dollar Japanese yen did in fact break above the consolidation box, creating higher highs. And now what we would like to see is a short-term pullback to create a flag pattern. And if in fact we do start to continue to break to the upside, followed by a pullback to create a retest, we could expect one more push back to the upside. So remember, stops are at break even once you get to that 110.48 handle. That 110.48 handle is a very critical area, guys, in which, to be completely honest, the safest trades are above that 110.48 handle. If not, guys, then from there, you're going to want to see what structure ends up doing within there here, right? If we start to falsely break back down, you want to be looking for potential sell opportunities or potential sell areas. If you can get entry within here, you could potentially look to run that all the way back down to the floors of the consolidation, and then from there see if you can get that continuation push all the way back down to the 104 handle and potentially even further. One thing, guys, is that once structure breaks back inside this consolidation, just know that once it starts to create its base again, structure will consolidate for some time until it gets some type of catalyst to continue within its direction. So with that, guys, you guys are either looking for a pullback, continuation back up, but remember, this might start to consolidate, or you guys want to see structure breaking back down, looking for entries within here, stops are at break even and giving it a shot. Just real quick, guys, if you look at it from the 1 hour time frame right now, you can see that US dollar Japanese yen is showing a reversal pattern rather than a continuation pattern from this initial impulse, in which if we do in fact break that, that is your short-term sell to that ascending trend. Stops are at the tops and you can give it a shot. Like I said, the safest bullish plays are above that 110.48 handle. Looking at GBP USD from the daily time frame, we can see that structure is showing that we should expect a reversal at some point, as we did see that initial impulse made to the downside, followed by a reversal pattern or a pull, followed by a reversal pattern, but that's due to liquidation and profit taking. And what it's indicating or hinting to us, guys, that at some point we are going to expect this pullback, right? And the question is when, though. And so, like we said, we don't know how long this is going to last, but we know that it's going to come at some point. And so we can see that structure is at a very critical area, as we can see that it's testing the highs of the previous push to the upside. And so with that being said, guys, looking at it from the 4-hour time frame, we can see that structure is in fact in a reversal environment as of right now, as we can see that that impulse made was not forming continuation, but rather showing that eventually we're going to see a reversal back to the upside. And so with that being said, any trades that do pull back to this slow, decelerated, descending channel are going to be warranted as short term. And really, guys, you want to see those wicks broken before you see continuation to the downside. And so in reality, the safest sells are below the weekly support and the safest buys are above the daily resistance. Failure to do so is you're going to just be in consolidation. And so with that being said, you want to see an impulse above followed by a continuation pattern, and you guys can take that back up. Just remember, we don't know how long that's going to last. And the same thing from here, guys. If you see an impulse followed by a pullback, you guys can look to run it back to the downside. So that is for pound US dollar. AUD USD, guys, on the daily time frame is showing that we should reverse at some point, giving us indications after this initial impulse was made. We are in somewhat of that same environment, right? And so at some point we are expecting structure to pull back to this ascending trend, descending trend, and potentially even higher to tag those tops once again. But as of right now, guys, structure is showing still further continuations to the downside. And so with that being said, we're going to want to be careful until structure does create higher highs, giving us clear signs that we are set to continue to the upside. And so with that being said, guys, we can see that we are having a tough time holding below that 7473 handle with false break number 1 and potentially false break number 2. And so with that being said, if this does in fact start to break out, we're good. That is a potential short-term buy back to the upside, testing the neckline of this inverted head and shoulders pattern, right? And then from there, if you guys do get that, your goal is to hopefully run that back to the upside, right? Once again, guys, that the safest trades are above the 757 handle or below. I would say I would honestly say the 740 handle. As you can see, that gets rid of all the wicks. Failure to do so may just warrant consolidation or consolidation or emotional distress, as I like to call it. And so this is really the only viable buy that I see. If not, guys, be very careful from the downside, as they are going to be warranted as short term. New Zealand dollar right now, guys, is showing that eventually we're going to start looking for a structure to pull off and start decelerating and expect a pullback, right? This is a pretty extended movement. So at some point, we're going to expect structure to reverse. But as of right now, especially on the daily time frame, it's not showing any signs of relief or exhaustion. And so structure is looking to continue to the downside, but just take into consideration that its entire nature or its entire structure as of right now is showing that it's going to reverse after this initial impulse was made, right? So if you guys do get these short-term pullbacks, you guys can take them. Just know that they are short-term because you want to take into account the entirety of the structure, right? And where it is. If not, guys, if these trades don't come out where you get these short-term sells, you guys want to definitely see a strong enough impulse to the upside to say that this is now invalid, right? And then from there, you're going to look for a continuation pattern and start running that back to the upside. Failure to do so, guys, will just warrant potential consolidation, right? Within here, if we do start to break back above, and you guys don't want to be trading within that. Remember, guys, the New Zealand dollar and all the other dollar pairs should be treated as short-term and potentially higher risk only because of the extendedness and how their structures are behaving. And so with that, guys, that's the breakdown of the dollar pairs. I hope you guys enjoyed that. And now we're going to get into the questions and answers.